Are we near full recovery in the Denver market? Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. It is time to talk June numbers. Buyers put 4,100 homes under contract in May, which was 200 fewer homes than the month before, giving us a 4.5% decrease from that month. It is also 25% fewer homes under contract than the year before. We saw 4,100 closings in May, up 13% from last month, but still down 25% from last year. 5,000 new homes hit the market in May. This was up 10% from the month before, finally, but down 25% from last year. Every single stat was down 25% from last year. We finished May with 4,800 properties available for sale. This was actually an increase of 500 additional homes from the previous month. However, with the additional activity that we had, we still finished out with 1.2 available months of inventory. The average days on market dropped from 29 days to 22 days, and the median days on market dropped from 8 to 6. All right, let's move on to those home prices that we're also curious about. The average closed price for all homes last month was $689,000. That is up $21,000 from the previous month. That's a 3% increase in 1 month, but still down 2.5% from the year before. The single family home price average is $781,000. That is up $23,000 from the month before. That is also a 3% increase from the month before, but it is still off the mark by 2% from last year. The condo and townhome average price is sitting at $480,000. That is actually up 4% month over month, but still down 3% from last year. Over to those median home prices. The median sold price for all homes is $590,000. That is up $15,000 from the month before. That's a 2.5% increase month over month, but down 3.5% from last year. The single family home median price is $651,000. That's a $16,000 increase month over month. We're up 3% month over month. We're down 3% year over year. And $422,000 is the median condo and townhome price right now. That is also just like the average, up 4% month over month, but year over year, we're down 2%. That list price to sales price ratio has continued to inch up. We're now at 99.5% of list price to sales price ratio, meaning there is barely on average any discount for a home relative to its list price. Okay, so what are the takeaways? Well, if we glance at this report, it seems that we have really almost caught up to the market from last year, right? We are only off the mark by 2%, 3%. It seems like we're so close. Really, we're not that far off. However, the high in the market last year was hit in April, which would have been the May report that we put out. Well, if we compare price to price, then we see something that's a little bit different. The single family home price in April of last year was $820,000. Where we are today is around $780,000. That gives us about a 5% differential. Not huge, but it is enough that a lot of sellers are saying, I would really rather wait and not sell and lose some of those unrealized gains. It takes a lot of motivation still to get a seller off the couch and moving in this environment, between the interest rates, because most people buy a home and the one they sell a home in, and the fact that they do have unrealized gains that they feel like they are missing out on still. Now, if we keep our growth rate at about 2% a month, which is roughly what we've been for the last several months, we're going to meet where we were last April around September of this year. We don't typically see the high point of our prices in the fall, but just a couple of years ago, we had a high point in October, and we have yet to get back to a completely normal market, so it is possible. We may see that we're hitting our high in September or October, particularly if rates stay fairly flat or even start to trickle downward. If we compare the market we're in right now to 2019, pre-pandemic, here's what it actually looks like. Today, we have 38% fewer homes on the market. We have 27% fewer homes under contract. That makes sense. We have a lot fewer homes available for sale. We have 28% fewer closings, and both the average and median sold prices are up by 39%. That means home prices. So a 40% change in home value from 2019. The average days on market is down 14%. The median days on market is down by 4%. I've heard some people call the market we're in today a stronger market. I think I would call it a tighter market. It's not comfortable for me to call this a stronger market when it's just really due to a lot less inventory. But if we do get more inventory, I think we're going to see a lot more buyer demand, particularly because I think it's all relative to rates. When the rates come down, we're going to see all that pent up demand come back into the market. And then I think we're going to see what I would comfortably call a strong market. This right now is what I would just call a tight market. Now, let's actually look back just 6 months to January. This is when we hit the low point for prices in the Denver market. Of course, there's always chatter there's going to be a crash. Those people that love to say that are always out in the media. But let's look back and see where we are relative to that too. Average sold prices up 12%. Median sold prices up 10%. Our average list price to sales price ratio has moved from 94.5 in January to 99.5 this month, which tells us that homes were selling at about a 5% discount at the end of the year, start of the year, and now we really are having on average no discount. Of course, there are opportunities. Homes that have been sitting on the market for 3 months are just dogs, but when we're finding beautiful homes, move-in ready homes, we are seeing bidding wars. I have just been talking to clients over this weekend where they have been outbid, or they're just not seeing the value in the house, or homes that were under their max price point have had multiple offers and taken it over their max price point. So bidding wars are still here. All of this growth in home price really has nothing to do with an improvement in rates. Rates were about 6.25 at the start of the year. Today they're around 6.5. They have not actually stayed fairly flat in between. We have had surges into the 7s. Aside from those blips, it's not been that bumpy though, relative to the sharp spikes we had very quickly last year. This is really all just about demand. And about the fact, let me tell you, that so many home buyers know that as rates come down, there is so much pent up demand that's going to come back into the market that we are going to see something akin to what we saw during the pandemic. If and when we get rates back down into the 5s, 5.5 range, we are going to see, especially first-time home buyers with money and those who have been saving, coming out in a rush to get the home they have been waiting for. The drive in home prices is due to low inventory today and the fact that there are so many buyers who know getting a home now before home prices go back up as rates come back down, which historically happens after every softening of the economy, is a good idea. Thanks for joining me for the June market update. As always, I love to hear your thoughts on the market, and if you have questions as well, please reach out, and I will see y'all next week.